What's up, people on YouTube? Today we're gonna talk about the S word. S-E, I'm just joking. We're gonna talk about stocks. This video is gonna be for the complete beginner, somebody who has never invested in the stock market, maybe isn't even sure what the stock market is, but wants to get started investing and has realized its potential to help you grow your net worth. I'm Joji Davenport, and I'm here to teach you about stocks. This is going to be a part one of a multi-part video series called Building Wealth in the Stock Market. And if you don't want to miss future videos, be sure to follow me and subscribe. So let's get right into it. Think of a stock as a company, like Apple or Google. And if you own a stock, you own that company. Well, not the entire company, but a small piece of it, which we call partial ownership. It's a fancy way to say you don't really own much. You'll hear this partial ownership defined as a share because to own something partially is to share it with other people. And as a stock market investor, you have the opportunity to buy shares of a company stock. Okay, so if a stock represents ownership in a company, then what is the stock market? Think of the stock market as the place to buy and sell stocks or companies, just like a market is a place to buy and sell goods. Like in the stock market, you can buy shares or partial ownership of any publicly traded company. Just like in a market, you can buy anything that is for sale in the market to the public. The reason why I say publicly traded companies specifically is because the majority of companies are private and do not go public because they have a low market capitalization. Basically, most companies are just small businesses, which means that you can only invest in companies that are a bit larger and are publicly traded. You can, for example, invest in Cheryl's Diner because they are not a publicly traded company. They're just a small private business. But their breakfast is bomb. And by the way, this video isn't sponsored by Cheryl's Diner, but I really wish it were. So not all companies have the market capitalization or are big enough to offer stock to the public. And the easiest way to figure out if a company is publicly traded is just to look up the company's ticker symbol or their acronym that represents that company in the stock market. For example, the ticker symbol of Amazon is AMZN. For Coca-Cola, it's KO. And for this penny stock, which you should definitely not buy, New Gold Incorporated, it's NGD. If a company doesn't have a ticker symbol, it's not a publicly traded company and you can't invest in its stock as it doesn't exist. So let's talk about why a private company would decide to go public through an IPO or an initial public offering. A company can decide that it's in their best interest to raise money or capital so that they can grow and expand their business. You probably heard that saying, it takes money to make money. And in exchange for that cash money, that company is willing to give up equity or ownership in their business because they can use the money to generate more profit through advertising, research and development, and so on. So to summarize, a company decides they need to raise money. They issue stock through an IPO, which means they go public. Investors can buy those shares or that stock, and in return, they now become shareholders or partial owners of the business. This begs the question, why would we or should we invest in stock? It's actually quite simple. Your goal as an investor is to grow your money, and the goal of a company is to expand profits and also make more money. In other words, our interests are mutually aligned. So if you become a partial owner of a company by owning a stock, you can make money as the company profits. And you can do all of that with one click of a button without needing to go to meetings, physically work for the company, make coffee runs for the boss people, or participate in the company in any way at all. And you would just do that through an online brokerage like Vanguard, Robinhood, Fidelity, Betterment, Charles Schwab, and the list just goes on and on. Okay, so how exactly do you make money from owning stock or shares of a company? As a company grows, its value or market cap also grows. The Amazon of today is a monster compared to the 2005 Amazon. I mean, just look at Jeff Bezos' transformation. And as a result, the owners of Amazon obviously make a lot more money because the company generates larger profits now than it did back in 2005. And as a result, the price of shares or ownership of the company have also risen because it's now way more lucrative to be an owner of the company. So this leads us to the number one way that you'll make money owning stocks, and that is through the appreciation of the stocks that you own. As the company grows in value, so do the prices of the shares that represent equity or ownership in the company. And as the demand to own the company increases, so does the cost required to do just that. Let me give you an example. The price to own a share of Apple stock on January 5th, 2007 was $3.04. 5 years later, the same piece of ownership or share was selling for $14.99. So if you bought one share of Apple in 2007 and decided to sell that share or piece of ownership in 2012, your profit would have been $11 $11.95. In other words, the stock appreciated $11.95 in value from 2007 to 2012. And that came from someone who was willing to pay more for a piece of ownership than you paid back in 2007. Now, the only way you actually make that money or realize that gain is if you decide to sell the stock to someone else and they actually buy it. The person who bought that share in 2012 is sitting even prettier if they're still holding it now, because the current price of Apple is substantially higher. But again, you don't actually make money until you sell the stock and realize the gain. If that didn't make sense, think of it like this. Let's say I bought these Jordans for $100. And think of these Jordans as stock in a company. And in 2 years' time, the market value of these Jordans are now $300. They appreciated in value, but I don't actually make money until I sell them or realize the gain. This is basically what you're doing with stocks. You are buying and holding with the hope that the value of those companies will appreciate over time, where you can then sell them for a profit. Let's take a step back and think about why the price of a share of any company would increase over time. Let's just take Apple for an example, because we used them in the last example. Apple revolutionized the world. Apple iPhone, iPad, iPod, MacBooks, AirPods, and so on. They generated enormous profits selling their products around the world, which means the owners of the company made buco bucks. And as a result, the price to own a share or partial ownership of the company appreciated as more and more people wanted to be an owner of a company, making insane profits. The point here is that as a company provides more value to the world, makes new products, generates higher profits, their market capitalization grows, and more people are willing to buy that company stock because they believe the business will continue to grow and prosper. The second way you make money by owning stocks is through something called dividends. You probably heard the phrase, X pays dividends, and that term comes from the stock market. A dividend is just a fancy name for profit given to company owners. And since you are a company owner when you invest in stocks, you receive this profit or dividend. Now, they're paid on a scheduled timeline, which could be monthly, quarterly, or annually. Each company pays a different percentage dividend per share that you own. For example, Apple pays a 0.55% dividend per share per year, which is divided up on a quarterly basis, which is just every 3 months. Now, not all companies distribute dividends. Some decide to retain their profits and just reinvest them back into the company. So to summarize, you'll make money in the stock market through 2 ways: appreciation and dividends. And the reason why we want to invest in stocks is so that, like companies, we can grow our net worth. So you've learned some basics about the stock market in this video, but don't just go off buying any stock you can think of. In the next video of this series, I'm going to convince you why buying something called index funds is the best investment approach for 99% of people, and I'm going to do my best to dissuade you from buying individual stocks or investing in mutual funds. So if you're interested in watching that, don't forget to hit the subscribe button, turn on the notification bell, and I'll see you in the next video. Goodbye.